Hello, this is Mark Boardman. I'm talking to you at around about 8:21 p.m. on Tuesday the 21st of August, and this is today's summary of my live trading room trades. Just before I go through those, I just want to let you know about a couple of trades I'm in right now. This is just for the record, 21 minutes past 8 UK in the evening, that is PM UK time. What you're looking at here is an indicator called the Fat Man. I don't think you'll forget that name after you've watched this video. This tells us basically when currencies are overextended either to the upside or the downside. And what you'll notice about this indicator is that whenever one of those coloured lines reaches the top or the bottom of the indicator, which I call the ceiling and the floor, it can't help but snap back. It's like a piece of elastic, and it's just the nature of the currency markets. You've basically got a bunch of institutions, mainly large banks, all vying for supremacy with respect to their currencies, and so this is why currencies ebb and flow on a constant basis. In fact, if you look back over any 10-year chart, you'll notice that currencies can never actually go to zero, or indeed keep increasing forever. And this is also reflected on a daily basis, as you can see from this indicator. And so what we do is we wait for one of the currencies to get to the top or the bottom and wait for it to snap back. Now, that's why I call this system the FX trend catcher, because what we do is we use this to get into new trends early, and that's really the key to making profits consistently in Forex. The thing that kills most Forex traders is that they don't stay in winning trades long enough. So they'll put in stop losses to make sure they don't lose too much on trades, but when they start to win, they don't stay in long enough and end up looking back regretfully at many trades and wish they'd stayed in longer. So what I use is a system called the FX trend catcher, and this gets me into trends very early. It also then keeps me in those trends for as long as possible, so that my win to loss ratio is very positive. Now what you can see here is a chart, is an indicator with these two colours here at the bottom hitting the floor. You've got these two currencies at the top also hitting the ceiling, but these two started to turn first. Can you see where the cyan or light blue line is starting to turn, and this is the magenta line here starting to turn? These two represent the Japanese yen here, and the bottom one is the US dollar. Now as these were starting to turn, that suggests that they're going to bounce, by the way, and flick back, which means they're going to start to trend in the opposite direction. You could see coming down here the red line, which is Australian dollar, strongly heading down. Similarly, this yellow line here was heading down strongly, and that's the Canadian dollar. So what I did was I looked at this red line here, and I was looking for that one versus the purple line. So that's the Australian dollar versus the Japanese yen. Now just bear in mind what I'm saying here. The yen is about to strengthen because it's hit the floor, and the Australian dollar is weakening. So the Aussie yen is going to come down. If you look at the Aussie here, this is the red line, it's been strengthening and the yen has been weakening. So that was an Aussie yen uptrend. What we're saying here is that that uptrend is going to reverse and come down. Why? Because whenever a currency either hits the ceiling or hits the floor, it always bounces back. Similarly, if you look at the US dollar here, that's starting to bounce here, and coming down is the yellow Canadian dollar heading south. What that tells us is that the US dollar versus the Canadian dollar is going to start gaining strength. So we're looking at two potential trades here that I look for. One was the Australian yen short heading south, and one was the US dollar versus the Canadian dollar long heading north. And these are the two trades that I'm in right now on the 15-minute chart. So the Australian yen, let's go to that first. You'll have to bear with me because when I run this recording software with the software I use, it can take a while. So as you can see, we're in here now. I got into that Australian dollar versus the Japanese yen at that's 12:45 New York time. So that's 5:45 over here in the UK. This was after my trading room. My trading room finished at around about 3:30, 4:45. So I entered the market there. I can tell you what I entered at. It was 83.31. Now we're running at 82.95 at the moment, so we're currently in around about 36 pips of profit. Okay, so I'm still in that trade, and I've no intention of moving away from that trade. The other trade that I just mentioned, because of those bounce backs off the floor, was the US dollar versus that Canadian dollar. If you recall from the indicator I showed you, the yellow line was heading south, that's the Canadian dollar, and the light blue line, which is the key one, is the US dollar about to bounce back. So we're looking for a US dollar versus Canadian dollar long. And this has happened here. I've put candlesticks on this chart because I've had quite a few requests from people to show the charts with candlesticks. I personally don't bother with candlesticks anymore. I used to use them, but I don't now. Now I entered here. The reason, by the way, that I enter here is because I always wait for this system to give me the signal, which is a red forex volume bar here. Yes, we can get volume in Forex now for the first time ever. We've got a system that takes volume, tells you whether there are buyers and sellers in the market. Then we have something called the heat map in the middle, and then a trend dot here. And only when I have all three in bright green do I enter a trend, because that tells me that the breakout to the upside has been validated, has been confirmed. Okay, so I entered that trade at 0.9867. and we're now at 9897, so around about 30 pips. Now the market will definitely pull back at some point. I don't necessarily expect to finish that trade with 30 pips, or indeed the Australian dollar versus the Japanese yen with 30 pips, but nevertheless I'm still in those two trades, and they're very healthy trends. And that's basically all you do with this system. You just wait for those lines to hit the bottom, hit the top. They always bounce back 100% of the time, not 90%, 100. Now the question is, do you win every trade using this system? No, you don't. And the reason for that is that you can't just rely on those coloured lines. You have to rely on something else called volume price analysis to tell you whether or not the trend that you're entering in is going to basically be sustained or fizzle out to nothing. And occasionally it fizzles out. So even though those lines are bouncing back, the trend still isn't strong enough. Now you don't have to do any work here. The software does it for you. And basically in the trading room this morning, I had my first ever losing trading day. In other words, I placed two trades in this case, both were losses. That's not happened before, but I'm really pleased that it did happen, because I need you guys to know that this is the real world we're in, not a fantasy. Only in fantasy land does every trading day become a profitable day. No one on the planet has that sort of track record. So I was always going to get a losing day, and after 2 weeks in the trading room, it's happened. The good news is that when you get losers using this system, they're not very big. So let's have a look at the two trades that I took in the room this morning. The first was the Australian dollar versus the US dollar, and it was just here. This was on a 5-minute chart. I won't go into too much detail in this summary video why or how we pick the time frames. If you want to know that, come into the live trading rooms, and I'll show you how to do that before the end of this video. But I entered here. Now I've got a record of that somewhere. That was at 105.09. okay, 105.09, and the market did start heading south according to my indicator, but then it pulled back, and I was closed out here. I closed the market at 105.04, so that was a -4 pip loss. So there was a 4 pips loss on that. Let me just show you why I took that trade. This was based on the indicator here, and this was the red line here. Can you see this red line at the bottom? This was starting to bounce back. This is the Australian dollar. Now at the time that that was bouncing back, we had the light blue line, which is the US dollar, heading south. So that tells me that with the Australian dollar strengthening and the US dollar weakening, i.e. the Australian dollar bouncing back here, that was a potential long Australian dollar versus US dollar on the 5-minute chart. And therefore, going back to the trade itself, just give it a second to flick back. What you'll see is I wait for the signal. Just bear with me while this I apologise. I've just realised that that bit there wasn't the trade. This was the trade here, so I did get stopped out. Indeed, there was the entry here. So let me just at least this mistake proves that this is all live and not made up. This was the entry here. Can you see? So I got the signal here to go long at 105. It was the other way round. Where was that? Let's have a look. That was 105.07. Yeah, 105.07. And it did go long, but then what the volume price analysis indicators have done is they've said that that trend can't be sustained. So even though that Australian dollar started to bounce back against the US dollar, it couldn't sustain itself. And I was stopped out here at 105.04. Okay, so in fact that was it was a 2 pip loss. Okay, it was a 2 pip loss. It was Australian dollar versus the US dollar. Now, the other trade that was losing was the euro here versus the British pound. I got a signal to go short, and indeed went short here. That was at 7900, and the market did indeed start to come down, but then couldn't be sustained, and I was closed out here at 7902. That was another 2 pip loss. Let me show you why I got that signal. It was using the same system. I was looking at this currency indicator, and here is the green line. Now the green line here had hit the ceiling, that's the euro, and as that was turning, you can see this orange line here, that was starting to head north. So because these lines always eventually is the appropriate word here, bounce back, I was confident that that euro and that pound was a good pair to trade because the pound was starting to rise. As it happened, you can see that the euro bounced back a bit here. Can you see that kink? I call that a bobble. Okay, they don't happen very often, but when they do, that's when you don't get a winning trade. But very importantly, look at both of these losing trades. That one there, a few pips loss, and that one there, a few pips loss. And then look at the trades when the bounce back really doesn't bobble, and look what we have here and here. Okay, now in terms of my trading room record, I am not going to count. So when I put up on my website the trades I've placed, these will not be included. The trades I'm showing you now, which I'm currently in tonight, were placed after the trading room, but I did want to I am going to be showing you all the trades that I place both in the room and my own personal trades that I do outside the room, which are in addition to the ones that I place in the room. Why? Because I want you to see as many opportunities as I can show you. But in terms of my track record in the trading room, I'll only ever count the ones placed in the room. So in terms of today, 2 small losses. It's our first trading room loss day, which is good because we need losing days. You have to give back to the market from time to time. I hope that that was clear enough. If you would like to know more about how and why I got these signals and how this system works to make me a living, then just register for my trading room. I'm just trying to think the best way to do that is to send me an email at mark@hawkeyemt4.com. Let me spell it out for you. That's MARK at HAWKEYE, M for Mike, T for Tango, the number 4.com. mark@hawkeyemt4.com. Thanks for listening to today's summary, and there'll be another one tomorrow. I'll let you know how these 2 trades I'm currently in play out, and obviously I'll be summarising the trades that I find and place in tomorrow's room. So thanks for listening, and I'll see you soon.